The following content is meant purely for educational and informational purposes and should not be relied upon as financial, investment, legal, tax, or any other professional advice. This is the Fundamentals podcast, where we demystify crypto and help you navigate this ever-evolving internet-native economy. In this episode of the Fundamentals podcast, we're joined by Michael Kong, the CEO and CIO of the Fantom Foundation. He joins us to discuss the unique value proposition of Fantom within the blockchain landscape, its core technology, and approach to achieving scalability. We explore the structure of the blockchain market sector, how Michael sees it developing, and where Fantom fits into this vision in the long run. We delve into the architectural development of Fantom, walk through Fantom's economic model, and learn how it drives network sustainability. Lastly, we speak about current business development focus areas and challenges to tackle. Michael highlights Fantom's new technology, Sonic, and describes its potential impact for unlocking growth. Tune in for a great discussion about the fundamentals of Fantom. Hello, Michael. Welcome to the Fundamentals podcast. It is great to have you on.
Thanks, mate. Yeah, really appreciate it. And thanks for the opportunity.
Of course. I've been looking forward to get to dive into the whole Fantom ecosystem, everything that's going on at the moment, and how you're positioned within the space. But before we start diving into the details, it would be great if you could kind of preface this session with what is Fantom's core value proposition within the blockchain landscape?
So I think its core value proposition right now is essentially it's like speed and scalability and being able to achieve that in what we call like a permissionless environment. So just to dive down into what I mean by that. So the way that like Fantom's like consensus mechanism works, and first of all, just to give a general idea about Fantom, it's its own like blockchain, like commonly referred to as a layer one, although I don't like particularly like these terms. I just like to say, it's its own blockchain. It confirms transactions itself. It connects with other parts of the technology stack, such as like the Ethereum virtual machine, basically the smart contract engine. So the way that you would write, compile, and deploy smart contracts on Ethereum essentially works in a very similar or the same manner as on Fantom, right? But what makes Fantom, unique or I guess different from say Ethereum or other projects out there is its ability to confirm transactions in an asynchronous manner. And what I mean by that is, intuitively, if you're processing one block at a time, right, say on Ethereum, it's going to be slower than if you can process, say, multiple blocks at the same time, right? If you can process, say, 3 blocks, if your network can process 3 blocks simultaneously, then that is going to be faster than processing 1 block at a time sequentially. And that's essentially like how the Fantom consensus works, is that there's a series of algorithms that allows different parts of the network to confirm different transactions at the same time, but then they all somehow get put together on the same ledger. So you do get that final ordering of transactions, because that's a key property of blockchains, that you have transactions that are ordered, from the beginning of time to the most recent time, and that it's the same between all of the nodes. So we still achieve that final ordering in the end, but we do it in a kind of like a unique manner that allows you to get higher transaction throughput. And we're able to do it in a permissionless environment. So we don't, for example, like necessarily know like you are behind all the nodes. There's no like central authority that says, okay, if you come to me, I don't know, I'm the single source of truth. I'm the one that, can, determine like the final order of transactions. It's all done by the network. Like 2/3 of the total voting power of the network is how you confirm a transaction.
Got it. That is a great overview. Thank you for that. Now, I want to tag on. You mentioned that you don't like the term L1 because I feel that has become somewhat of a universally accepted way to frame the blockchain landscape. We have L1s, L2s, and now we're speaking about L3s, etc. How do you think about the structure of the blockchain landscape if you don't like the terms L1, L2, etc.?
Well, I think like L1s and L2s are pretty much the same, right? So the reason why people make a distinction is because they believe that, an L1 is kind of like Fantom or a few other chains where they just run independently from, say, Ethereum. They're just like their own standalone chain, and they run their own ecosystems and like consensus mechanisms, right? And then people have the idea that, this is in contrast to say like an L2, which, supposedly like sits on top of Ethereum and essentially inherits the security properties of Ethereum, but still allows you to, execute transactions in a more scalable manner, with lower transaction costs, because, you're using this like additional software that sits on top of Ethereum. But in reality, that's not like really the case, right? So like the way that like these L2s work is that the reason why you're able to use a surface like what appears to be more efficiently than say Ethereum, you pay lower fees, etc., is because the consensus the way that the transactions are confirmed is really on their own like network, right? And they just have a bridge to Ethereum where people can move assets or roll up assets from Ethereum to, the L2 and back down, right? So essentially it's like its own, the L2s are like their own network that have a bridge that connect to Ethereum. And so what they're essentially doing is that they're trading the security properties of Ethereum for their own security properties, which tend to be like less than Ethereum. And in doing so, you're basically trading like security for performance, right? But because these L2s confirm transactions on their own chains and they have their own consensus mechanisms and they have their own way of storing the data, that is pretty much what like an L1 is as well, right? It's running its own consensus mechanism, storing its own data, executing its own transactions. It's just that, they have this like bridge that they, periodically will package all the transactions and submit to Ethereum. But Ethereum is not, confirming that all of the transactions in the package are correct and are ordered in the correct manner, right? It just assumes that's what the L2 has done and that is correct and that they're happy to confirm this like batch of transactions on its own network. So in reality, the properties of an L2 and an L1 pretty much the same conceptually speaking. And that's why I don't really like the term. I like more of the term like its own distributed ledger because I think that's more like better defined.
Got it. Thank you for sharing. I think that makes a lot of sense. Now, you mentioned some of the top optimizations that you're focusing on with Fantom. And given that there are several blockchains within the market that are kind of trying to tackle the same scalability, speed, and throughput issues, could you really just crystallize what your unique selling proposition is within this landscape?
Yeah. So the unique selling proposition, I guess, in terms of the technology, is that we don't just have this unique consensus engine, this asynchronous like consensus engine, as I described earlier in this podcast, but we also have a lot more scalable technology coming down the line. And in fact, we just released the testnet of, vastly improved technology stack just a few days ago. And so what we've done is that we've optimized different parts of the stack that say other chains and Ethereum in particular have not really focused on, right? Because when you confirm a transaction, particularly if it's like a smart contract based transaction, it's not just consensus that you have to consider, right? Obviously, consensus is a very important part of confirming a transaction. That's how you get, the transaction actually embedded into the blockchain. But there's a lot of processes involved in, confirming a transaction. Firstly, the user has to submit data to like an RPC server, and that has to be sent to the network. And then those transactions have to be, executed by, what we call a virtual machine. And it's essentially like a layer of software that executes a smart contract to make sure that, it understands like exactly like what the transaction is supposed to do, right? And then when you execute the smart contract, it has to be saved in the local database, and then it gets passed on between different nodes, and the whole process kind of repeats itself, right? Per node in the network that confirms the transaction. And so what we've done is that we've really focused on optimizing like the smart contract processing layer. So that's to do with, the way the data is stored. It's to do with the way that transactions are executed via the virtual machine, which is why that we've built like our own virtual machine, which is totally Ethereum compatible. We've built our own storage system, which also happens to be compatible with the existing storage system. But we've been able to take advantage of the properties of the way that our consensus works, being able to process transaction asynchronously to get much, much better performance than I think any other chain that's out there. And we're talking about like significant reductions in the amount of storage as well, by more than 90% for all kinds of nodes. We're talking about, massive increases in throughput to, over 2,000 transactions per second, whereas the Atom chain at the moment can only handle, maybe, 20 or 30 or 40. And these are all smart contract based transactions. And I think that's what makes Fantom unique, really, in terms of the technology that people can take advantage of, particularly when this new technology gets deployed to the mainnet.
Got it. That is great. Now, given this architecture that you pretty much just laid out there, which apps are best suited to be built on Fantom? Do you have a purely generalistic approach in terms of what kind of developer activity you want to attract, or have you kind of sharpened that focus in any way?
Yeah. So as I mentioned before, Fantom is like a general smart contract platform. So any sort of like application that is built on Ethereum could be essentially deployed on Fantom as well and operate in the same way. It just operates in a, more efficient, scalable manner because of the different technology that we've employed. But in terms of like specific applications, if you have an application that consumes a lot of transactions, right? Has a lot of interactions with, with users, submit a lot of transactions, and they do it like repeatedly over a period of time, such as a game. When you're building up like a character, or you're building up, a particular sort of NFT, then a high throughput chain like Fantom really does make sense, because essentially what we're trying to solve for is that, if you have a really popular application that, your users will be able to keep using the popular application, there's not going to be a bottleneck. They're going to keep being able to pay no transaction fees. And also very significantly, there's other popular applications that run on the network, that those popular applications are not going to slow each other down, right? And so really, I think, in my opinion, like a strong use case for Fantom going forward, particularly as we develop and deploy the new technology to the mainnet, will be any sort of application that requires high throughput. So, just to take another example, like a DEX, DEX really does depend on like high throughput. That's how the DEX earns its fees, it's by volume. Well, if you have a high throughput chain, then people could engage in tremendous volumes in trades and many different trades, and it will just keep running very smoothly, just fine. And, people can already see the example of that via an application that the Fantom Foundation put together for the testnet, as well as like a few community applications as well. So there's one community application, for example, created by the PaintSwap team, and PaintSwap is the most popular NFT marketplace on Fantom. They're also responsible for a very popular game on Fantom called S4 Kingdom. And they built like a little application connected to our new testnet called Sonic. And it showed you could mint an NFT on Sonic versus the current Fantom mainnet versus Avalanche, right? And it showed that consistently, if you go and mint NFTs repeatedly, say on Sonic, your NFT gets minted in literally a second. And that's factoring in, the delays with, MetaMask and all the other, connection delays and all that. And it's about 1 second. Meanwhile, you mint that on Fantom at the moment, and it kind of varies a bit because the network isn't stable. So it can vary from 3 seconds to 5 seconds to maybe even 11 seconds on some occasion. And on Avalanche, it's kind of like a similar story as well. So I think, these sorts of like mini applications, if I can call them that, like minting NFTs or doing swaps on Fantom or on the Fantom testnet, really demonstrates that this is like the speed and the throughput that you really get on the new technology. And so if you're building that sort of application that does these sorts of transactions, then Fantom is a really good idea for you to use.
Got it. Yeah, that is definitely great. If we briefly envision a fully crypto native future, say 10 years from now, which may be a bit ambitious, how do you see Fantom evolving and its position evolving into, given all of the different approaches to building blockchain networks at the moment? And how do you see that market kind of either consolidating or fragmenting?
So I think into the future, like maybe 5 or 10 years, there probably won't be as many like different blockchains out there as it currently exists. It's kind of interesting because, obviously like a few years ago, there was only one smart contract engine really out there, and that was Ethereum, which launched, I think it launched its first mainnet in July 2015, right? Not that long ago, but there was only like Ethereum for a few years. And then came along like different blockchain projects or different blockchain platforms out there, such as, Fantom and others. And they purported to solve scalability issues that existed on Ethereum, using a variety of different like strategies or techniques. And of course, like the approach that Fantom went through was being able to like process transactions asynchronously, but doing it in the same sort of like permissionless manner, say that the Ethereum network works, right? Conceptually. I think in the future, there will be like some consolidation just with economies of scale to maybe, 3 or 4 or 5 popular blockchain different projects that are out there, not like the 20 or 30 that we see at the moment. And so really the objective of Fantom is to essentially stay relevant, right? And that's really a twofold strategy. One is building out the technology like we talked about, because obviously you need to have really working technology that's competitive, that people can see, really benefits them as a developer or user, maintaining low transaction fees, maintaining really fast confirmation times, or what we call time to finality, and also being able to handle like large volumes of transactions, really popular applications that exist out there. But also, there's a community aspect as well. So we're trying to, really focus on getting builders on board, having all sorts of hackathon and different like grants programs. And I think, there will be like consolidation into the future. And it's just about, as I mentioned before, staying relevant. And in terms of like different like technology angles that people are trying to solve in order to, make the networks more scalable, I think there's a variety of different pathways that are out there. Obviously, like one of the pathways that has gotten a lot of hype is focusing on zero knowledge, like proof technology. And that is, the idea that you don't need to have all the nodes in the network perform all the same sort of transactions in order to confirm them, but you only need, say, one or a few computers in the network to confirm a transaction, and then the rest of the computers can see the results. So far, in my opinion, it doesn't look like, the scalability claims of zero knowledge proofs have really manifested to the degree that people may have hoped. I mean, it might in the future, but that's one scalability approach. Another scalability approach that Fantom is also going to be exploring in the future is the idea of sharding. So that's being able to, not have the entire network confirm every single transaction in the network, but have different parts of the network confirm different parts, and then basically put all the shards together or the data together to get the final order of transactions. We think that is conceptually like a very good idea. And I know other chains out there, including Ethereum, have talked about it a lot. And then, another aspect of scalability into the future is, what Fantom has been working on, not just scaling the consensus that I mentioned before, but scaling the way that smart contracts are processed and stored on the network. And so I think that is an area that really hasn't had much focus in the blockchain space as a whole. It's like mainly Fantom that is really focused on, building a new, virtual machine that solves scalability problems, taking advantage of asynchronous processing of transactions, the way that data is stored to dramatically reduce the storage size and make transactions execute a lot faster. And I think that's what makes us unique. And I do think we have this cutting edge technology that, will be out into the mainnet over the next few months, and people should really see the difference.
Yeah, that's awesome. And given that you are an EVM compatible chain, what are your general thoughts on the importance of EVM compatibility, especially given what you just spoke about, that your kind of thoughts on the future of the blockchain market are that there will be consolidation happening, and I would assume that interoperability there is quite important.
Yeah, so we think EVM compatibility is very important. The key reason being is that, most smart contract developers out there are familiar with, deploying on Ethereum, right? Naturally, it's the biggest chain that's out there. I think it will remain the biggest chain for a very long time, for a number of reasons. First mover advantage, it's the most well-known out there. It's the biggest out there at the moment. And so naturally, if you're getting into the blockchain space, deploying an application, you're going to be familiar with, the programming language Solidity or maybe Viper. And then, you're deploying Ethereum, you understand how to write a smart contract and how to deploy it. And so it's very important, in our opinion, to be EVM compatible in order to be able to get all of those sorts of developers to be able to deploy in Fantom, rather than having to relearn a new language or a new technology stack or anything like that. So when we were building out the Fantom consensus engine, we were thinking about, okay, so what smart contract, technology do we want to integrate with? Do we want to create our own one, or do we want to use the existing one? And we very easily came to the conclusion that we wanted to be EVM compatible. And to begin with, we wanted to basically just use the EVM as is, right? And we're still using the EVM to this day until we switch over to the new technology. And that was kind of for two reasons. And it is really essentially commercial reasons, right? One is to be able to tap into the existing Ethereum developers, as I just mentioned. But the other reason is that, the Ethereum virtual machine and the smart contract technology stack that Ethereum has, although it has a lot of scalability issues, and these are the issues that we tried to solve for, it nevertheless does work, right? You can see it work, people deploy applications on Ethereum and they work just fine. So, it was also convenient for us because the technology already existed. And so we didn't have to, spend time trying to build our own and testing and that sort of thing. We could just attach it to, the Fantom consensus engine and be able to launch the Fantom mainnet, as we did at the end of December 2019. That being said, we wanted to solve these scalability problems, but a very important criteria that I said to the team very early on when they started developing the new technology is, and they said, I know the Solidity program language is not the best language that's out there, but we need to be Solidity compatible. We need to be EVM compatible because that's what people are used to. Even though we may be able to get some more performance gains by, creating a very different smart contract engine that's not compatible with Solidity or the Ethereum virtual machine, or write our own smart contract language, it's going to put us at a disadvantage, I think, commercially. And so, to be clear, the Fantom virtual machine is entirely compatible with any smart contract that uses the Ethereum virtual machine. So any existing smart contract on the Fantom network can automatically benefit from the new Fantom virtual machine when it's deployed. Another important thing is that the new storage mechanism that we created that significantly reduces, storage requirements and also significantly improves like the throughput and the execution speed of smart contracts. And that also is compatible with the Ethereum virtual machine and compatible with the existing storage structures of the of Fantom mainnet, right? Meaning that when people take advantage of this new storage technology, they're not going to have to relearn something, right? They're not going to have to redeploy the application. They're not going to have to use a different programming language or learn like a different way of deploying. It will all work for like pretty much the same way. And I think that's very important because as a developer, it's, oh, wow, I can take advantage more of this new technology or the scalability that comes with it. And I don't have to learn, everything from scratch again. So being compatible with, Ethereum developers has always been a very important goal at Fantom.
Yeah, that is great. That makes a lot of sense. Now, we all know that developing these technologies is not an easy feat. I'd be very keen on hearing what the different teams and their roles are that are contributing to the core development of the Fantom blockchain itself.
Yeah, sure. So there are primarily like three teams that are out there, right? So there's a team of engineers in the Czech Republic who work together pretty closely in the same office environment or similar office environment. And they've been working on this new Fantom virtual machine technology and storage systems I just talked about. And they've been closely collaborating with a team run by Professor Bernard Schultz, who was my old supervisor at the University of Sydney while I was studying there. He's a professor at the University of Sydney, and he joined our team around May or June last year. And so he is really, and his team are really like the architects of this new technology that I talked about, because his background is in an area called like programming languages, right? So he's an expert in, how programming languages work, security properties of programming languages, ways to, improve efficiency of executing code, etc. And so he took all of these ideas that he spent decades researching himself with regards to, other like technologies outside of the blockchain space. Namely, for example, like optimizing, Java code for Oracle or Android-based operating system code and virtual machine code. He took those sorts of like properties that he had learned from outside of the blockchain and incorporated those ideas into the blockchain technology. Because the way that Professor Schultz views like the way that smart contracts executes is essentially like another programming language, right? So the ideas of, programming languages outside of blockchain pretty much apply in a very similar manner when you're dealing with programming languages inside of a blockchain or smart contracts that deploy on a blockchain. And so, him and his team were really the archetypes around this new technology. And they worked very closely with this team in the Czech Republic to basically build the new like Sonic technology that we have coming out. And then there's a third team that's more distributed, run by our CTO, Quan Nguyen. And they're very much like focused, they were very much the original guys who built the Fantom chain that we have at the moment, right? They worked in 2018, 2019 to build the Fantom mainnet and integrated with, the Ethereum virtual machine, and they launched it. And so the technology that Fantom currently operates on was really like built and designed by them. So we have to give them a lot of credit for it. And right now, their objective is to keep optimizing and making sure the network remains stable as is, right? But, they're going to be working more closely, I envision, with Bernard and the Czech Republic team run by an individual called Jakub when they deploy this new technology to the network. So there's three unique teams at the moment, but they all sort of like collaborate closely together. And I think they all merge into like essentially like one team as a whole. Yeah, but these are the developers who are responsible for, the Fantom mainnet and the new Sonic technology that we've got coming out.
Got it. Sounds like you have a really solid structure in place in terms of core contributors to the Fantom blockchain. That's always great to hear. Now, I want to move on to your economic model next, now that we understand how you're kind of positioned from a technical and optimization perspective. Could you describe Fantom's economic model? And what I mean by that is how kind of value flows through the protocol in terms of where fees paid to, who's incentivized for what activity, how is value captured, etc.
Yeah, sure. The Fantom consensus runs on proof of stake, right? And so proof of stake is when you have a node that holds a particular stake. It may hold its own stake. It may have stake delegated to it by other members of the community. And essentially, it just continuously participates in voting, right? So when a transaction gets sent to the network, a node votes, whether to include it or not. And then it passes, the information to another node, and it also takes a vote, etc. And then once you have 2/3 of the total votes, of the network confirm the transaction, then the transaction is considered to be final, right? And that means that it's included into the block. It can't be like, rewritten. It can't be overdone. Finality is final, right? And that's a very unique property of the Fantom chain compared to, say, Ethereum, right? Is it's not based on any probabilistic finality. It's not based on the longest chain rule, right? It's based on this concept of once you get 2/3 votes, that's it. That's the definition of finality, right? It's not, different like stakers in the network, run like different like chains, and it's about, okay, which is the longest chain overall, right? Unlike, say, Ethereum. And so the way that the economic model works is that fees get paid to these validators. So if people, commit transactions to the network, they pay a fee, and then the fee gets distributed to the network as a proportion of their stake, right? So if you ever know that, stakes, say, 1/10 of the total Fantom that's being staked on the network, they will get 1/10 of the transaction fees on the network. So it's all done proportionally, but the validators on the network, they don't get 100% of the transaction fees. They get 70% of the transaction fees. And then the other 30% goes elsewhere. So about 15 or 20% goes to this program that we got on the network called the gas monetization program. And it's very similar to, say, the YouTube or the Twitter monetization program. But essentially, if you have a popular application that generates a lot of transactions, you get a share of the transaction fees of the transactions that are flowing through your network, right? And over the past few months since we've launched this project, we've been able to generate hundreds of thousands of dollars in transaction fees that are given back directly to the developers of these popular applications. And so what it does is it encourages people to, create popular applications that enables people to submit a lot of transactions to the network. And that means that, validators get paid more because there's more transactions flowing through the network. It means the developers get paid more because they've got more transactions going through the application. And so it's kind of like a win-win for, the network as a whole, right? For the developers and users and validators on the network as well, right? And then we've also got a portion of the transaction fees that currently goes to what we call the Vault program. And it's a discretionary grant run by the Fantom Foundation. And every quarter or so, we distribute the Fantom that's in this Vault to projects that, we think that could benefit the Fantom ecosystem the most, right? And so far over the past few months, we've been able to also distribute, a couple $100,000 to developers on the Fantom network as well. So, essentially, like, the economics is a pretty standard proof of stake economic model. It's all about transaction fees. And I think that's how you create a sustainable blockchain in the end.
Got it. It sounds like you have been able to really align incentives with the desired outcomes that you have at Fantom with that model. That's great. Now, you mentioned sustainability there. I want to dig into that one because it is, in the context of blockchains, always a topic of discussion that what does economic sustainability mean? So from your perspective, how do you define economic sustainability for a blockchain?
So I think for a blockchain, the business model, and we spend a lot of time thinking about it, the business model is really about, it's a transaction fee based business model, right? So if you take, for example, like existing business models that exist, right? Say like Visa or MasterCard, the way that they make money is by transaction volumes, right? The more people that transact on the network, the more fees that they pay and the more money that these companies make, right? I think for blockchain is a very similar concept, except different in certain aspects, of course, right? One is that, it's not a central company that is, collecting all of the fees for themselves. It's really like the stakers or the validators in the network that collect the fees, right? And those validators could be anyone, it could be, Fantom Foundation, as, we run some validators. It could be people in the community. It could be anyone around the world, right? Who can stake at Fantom and earn fees as a result of them staking and processing transactions, right? The other core difference is that whereas like Visa and MasterCard focus on just, volumes of payments, and that's what the business model is, for, say, a blockchain project, it's not like volumes of payments. It's about how much computation do you want the network to confirm, right? Because obviously, like, there are some transactions that are more complex than others. So if I send one Fantom from my wallet to your wallet, that's a pretty simple transaction, right? Because all the network has to process is, okay, I deduct one Fantom from Michael's wallet, I give one Fantom to you, right? But, there could be a much more complicated smart contract transaction that you're engaging with where, you're minting this NFT with all of this data, etc. And the NFT, has certain properties. And that requires more effort for a blockchain to confirm, which means that the transaction fee would be higher for that sort of transaction than a simple transfer that I just illustrated. And so what you're essentially doing is that you're paying for computation to be used on the network, right? That's a transaction fee model. And so the objective is really, okay, how do you build a network that can handle transactions of volume such that the cost of processing a transaction for a validator stays as low as possible. But in aggregate, the network is able to process a tremendous amount of fees such that validators get rewarded, as much as possible for transaction fees on the network. And in aggregate, what you want are really enormous transaction fees as high as possible, right? But on an individual level, you want the cost per transaction to be as low as possible, right? Because obviously users want low transactions, validators want to make as many transaction fees as possible. And so how you kind of like optimize for, what both parties want is you want to have a network that generates a lot of transactions and therefore a lot of transaction fees, right? And so in order for a network to generate a lot of transactions, you need to have the technology to be able to process it, which is why Fantom has been so focused on, scalability and solving the problems like with Sonic and other technologies that I talked about. And the other aspect of it is also on the demand side is being able to have enough popular applications and network to be able to generate, these sorts of transactions that you want for the network, right? Because obviously, if you don't have the technology, then you don't have the capacity to be able to handle large number of transactions at low cost, right? But equally, if you don't have the demand, then you also won't have, high numbers of transactions at low cost because you don't have enough people using the network. So if you're able to solve for kind of both problems in the long run, then you have a really sustainable economic model, which is just basically a fee-based model for the user.
That is a great answer. And now, kind of building on how this fee-based model works and comparing it to more traditional software businesses, having raised venture capital, can you describe how the venture case for a network like Fantom with your fee-based model differs from that of a traditional software business that we have gotten used to seeing being venture-backed?
Yeah, sure. So Fantom did like an initial coin offering, an ICO, back in early to mid 2018. We completed our ICO in June 2018. And really what sort of like how we sold like the Fantom project, right? Was that we had solved or that we were planning to solve like these scalability issues that existed with what was then just Ethereum at the time, right? And it's being able to do it by, being able to process transactions in an asynchronous manner, as I described earlier, right? And essentially like the business model was, okay, we're raising funds so we can sell this token. This token represents like your ability to, perform certain actions on the network, right? Be able to stake it and earn a fee on the network, be able to vote on like governance to influence like how the network goes going forward, and also to be able to pay transaction fees in the network, right? And so essentially the way I think about it is that if you own FTM, right, you basically own like a portion of like how the network operates. For example, if you own, like 1% of the supply of Fantom, you can, stake that 1% of the supply and you get, 1% of the transaction fees because you're part of consensus amounting to 1% of the total consensus on the network that's being staked, right? And so it's really about like network ownership, right? And so that's the business model essentially for, a distributed ledger network out there that has its own token because, you don't have a centralized authority that, controls the whole network or, owns the network, right? You don't necessarily have like shareholders like a corporation does, right? And you basically have this network where anybody can participate in it from anywhere around the world. And the way you participate in it is via the token, or for Fantom, it's like the FTM token, right? And so I think like the token-based model is very similar to other blockchain projects out there, including Ethereum itself, right? Because how does like the Ethereum, Ether token work, right? Well, it works in a similar manner, right? You use it to pay transaction fees, but you also can use it to stake, which means that you participate in consensus and you earn a proportion of the fees that are generated on the Ethereum network as a whole. And it's pretty much no different from Fantom as well. And that obviously differs in many ways from a traditional business, as I mentioned before, which, is a single corporation. The people who work for the corporation, work for the shareholders of the corporation, and they're really just focused on generating returns for the shareholders. In this situation, it's just a network that anybody can join and leave, and that creates value not just from one authority like the Fantom Foundation, but it creates value from anyone who decides to build an application on top of it and submit transactions on the network, or anyone who decides to participate in the validation of transactions on the network. So it's much more open than a normal corporation or business.
Yeah, it definitely is. Thank you for laying it out so clearly. I think that's helpful for many people, and also kind of building those comparisons between the more traditional companies and then how it works on something like Fantom. When we go into the details of trying to measure the value of a blockchain network, what do you see as the best metrics or KPIs to measure success?
Yeah. So as I mentioned before, how you generate a sustainable blockchain-based business model is really about transaction fees in the end, right? So the ultimate KPI is how much transaction fees do you generate, say on a daily basis, a weekly basis, or like a monthly basis, right? But there are other metrics that are sort of related that are also like kind of important to analyze, right? Because how you get to a network that generates high transaction fees is a number of different components that I mentioned before, right? Obviously, you need to have a lot of transactions flowing through the network. So, looking at like daily transaction volumes is also very important. How much users are paying per transaction is also very important as well, right? Because obviously the number of transactions multiplied by the average transaction fee per transaction is the fee amount paid to the network on a daily basis, right? A pretty simple formula. So that's also a very important metric as well. You can also look at like more dApps specific metrics as well, to kind of see, what sort of applications do people really want to use on the blockchain network. So for example, like on Fantom right now, we have a very popular game called S4 Kingdom, which is basically this a game where you build up a character, you level him or her up, and you engage in all sorts of different skills, fighting skills, mining skills, fishing, etc. And we see that's quite popular, that people want to play those sorts of games where they can build up a character and they can fully own the character because it's all stored as an NFT on the network, right? And so that tells me that, gaming or this particular aspect of gaming, say building up a character, like a role-playing based game, seems to be quite a popular application because that's where the transactions are being generated, right? And also, other types of applications are like swaps, right? Swaps have traditionally been very popular on many blockchain platforms. Fantom has been no different as well. And so you see that, people, love using decentralized exchanges and being able to swap assets easily from one to another. And so that also is like a kind of application that generates a lot of transactions as well. So you can start off like at the top level, thinking about transaction fees and kind of breaking that down and what that really means in terms of all sorts of like different metrics that exist on a blockchain network.
Yeah, that makes a lot of sense. I've recently been speaking quite a bit with different crypto investors about valuation frameworks for different blockchain networks. And in a lot of them, one pretty major component ends up being the monetary premium of the network's native token. I want to ask you that, how do you see monetary premium in the context of FTM?
I don't think for a Fantom, I wouldn't really call like Fantom, like it doesn't necessarily have the properties of money. Like obviously like people can use, Fantom as, a medium of exchange, a store of value, all like the critical components for what really makes like money like so valuable. The way I kind of think about it is, the FTM token and its potential use case, right? Its ability to, earn fees by staking it and help validate transactions in the network, its ability to pay transaction fees on the network itself, right? Its ability to participate in governance, right? I don't really see it as, a traditional form of money in any like normal sense, but more of a utility token or a token that has, particular attributes that say, US dollars or gold or, other tokens don't have, that's particular for the Fantom network as a whole, right? So I don't claim to say that, Fantom is a new standard of money or whatever, or is it like the new universal currency or anything like that? Because I don't think that's really true. And I don't think that's the purpose of FTM as a whole. Maybe that's the purpose of Bitcoin, of gold, of hard assets, etc., but not really what Fantom is designed for. So I don't really think there exists like a monetary premium for the FTM token.
Yeah, that is a great answer. And what you basically spoke about beforehand as well, that it is based on the ability to generate fees as little as possible on a per transaction basis, but in aggregate as much as possible. And that is very different to something where you have Bitcoin, where the fee generation is X, inflation is somewhat high compared to the fee generation, And the whole value, the biggest component of that would be related to monetary premium. So two very different types of networks there.
Yeah, and also like in terms of like Bitcoin, by earning Bitcoin, you don't participate in like network consensus, right? You don't participate in being able to confirm transactions and you earn a fee from it, right? So the way that fees are distributed in Bitcoin is completely different from owning Bitcoin as a whole, right? Because obviously, like you confirm transactions in Bitcoin via the Bitcoin miners. Well, a Bitcoin miner doesn't technically need to hold any Bitcoin. It can hold 0 Bitcoin because it's confirming transactions via the computers solving these prime number problems and adding security to the network. Well, that's completely separate from the actual Bitcoin token itself, right? Whereas for a proof of stake network like Fantom, you need to own FTM to be able to run your validator to secure transactions in the network, because that's like the mechanism.
Yeah, definitely. That was a great addition there. Now, moving on to kind of current and upcoming developments, more from maybe a business development type perspective. What are the biggest challenges or bottlenecks related to Fantom's growth right now?
So I think there's like a few bottlenecks. One of them on the technology side is, the current Fantom mainnet like isn't as scalable as would, hope it is. Its finality, it is like pretty low, but it does vary a bit, as I mentioned in the example of the minting of the NFT. There are like a number of scalability issues in terms of the growth of the data sizes on the chain, which is causing issues for validators at the moment because of like how many transactions, how much data is stored. I think we've gone a long way in solving these problems with the new technology Sonic. Being able to reduce the storage dramatically, being able to significantly improve throughput, being able to give it actually make finality lower than the current Fantom network, where it can be like even like sub-second in many cases, while like still being able to process large number of transactions. So that's one aspect. We definitely haven't solved all the technology problems with the new technology, but I think we go a long way in solving it. And there are other ideas that we have in mind, like I discussed, like sharding and other things to further help solve the technology problems. And then I think other problems on the business side are the fact that we had the multi-chain incident. Multi-chain was not like the bridge for Fantom, but it was like the biggest bridge for Fantom. And it's unfortunate what happened with multi-chain. A lot of it was a combination of bad luck and other circumstances, and that really hampered our growth, particularly on the DeFi side, because obviously a lot of people had bridge tokens to Fantom via multi-chain and build on DeFi applications around that. That being said, there are other bridges that have come in around the same time or subsequent to like multi-chain, namely like Layer Zero and Axelar, and there's a few others as well. And they've really helped enable people to bridge more tokens to Fantom and engage in DeFi again. And we're also working on native stablecoin issuance with a few number of like different providers out there that some people may be aware of. And hopefully, if we can get them to issue like a native stablecoin on Fantom that's backed by fiat currencies from the outside world, because I think that's also important for the growth of the DeFi network on Fantom as a whole. And I think just overall, like the perception of Fantom, right? Because I know that Fantom had a pretty good reputation in 2021, even though it had a number of issues as well, especially in terms of bottlenecks, because the chain was getting really popular. And then we had the whole issue around Andre supposedly like leaving when he didn't really leave, and then now more recent like issues with multi-chain, etc. I think over time those problems are dealt with when you find solutions for it. Like obviously Andre like never really left Fantom. He just wasn't communicated as well. For personal reasons, he went a bit quiet publicly, but now he's a lot more like public now, right? And with regards to say multi-chain, there are solutions to that as well, as I just talked about. So I think if we find solutions to all of these business problems that are out there and keep finding more solutions towards technology problems, if we're solving these problems as we're going into say better market conditions, then I think Fantom will be in a very good position to capitalize on the new leg of growth that we anticipate will occur with regards to number of users in the blockchain space.
Yeah, that makes a lot of sense. Now, on the opposite side of challenges, what would you say are the most exciting things happening within your ecosystem right now then?
I think the most exciting thing is the new technology that we've got coming out, because the results there have really like exceeded our expectations, right? When we started like working on solving these technology problems, with the virtual machine, the storage and other problems related to consensus, we weren't really sure, what the performance benefits would be. In theory, we believe that the performance benefits would be, quite significant. Like obviously, otherwise we wouldn't have, embarked on this new technology. But we weren't sure about the specific numbers, obviously, until we actually developed the technology. But as we started developing the technology and experimenting in particular, we started to see really positive results that, wow, we can generate, a couple of thousand transactions per second. Wow, we can reduce the finality to, even 0.6 or 0.7 seconds while the network is still handling a lot of transactions. Well, we really can reduce storage by, 90+%, maybe in some cases, even like close to 98%, right? And so when we started, experimenting more and seeing these good results, we became more and more confident that they would be available in reality, right? And it all came together in, the testnet that we just launched a few days ago, as I mentioned, right? Seeing people be able to interact with it, seeing the community, being able to see, oh, wow, the network really is being able to process, all these transactions per second. Oh, wow, like the time to finality really is a lot lower than previously because, I've been able to experiment, with different swabs and minting NFTs. And I can see it's just like blazingly fast compared to the existing technology. So I think that to us is the most exciting thing because now we can see all that hard work that we spent more than a year and a half working on really come to fruition. And I really think, as I said to Bernard yesterday, that we're approaching the finishing line of the beginning, right? In other words, we're approaching the finishing line of the first iteration of this new technology, but there's still so much more to come in terms of, more scalability problems and other like problems that we can solve going into the future as well. And we have a lot of ideas and we're very confident in those ideas given the results that we've gotten at the moment. So that to me personally is like what is the most exciting at the moment, because I think it will be an absolute game changer. I think it will allow us to get really popular applications on the network performing, large volumes of transactions, and the network will still operate really fast. And that these games will have a great user experience because when they submit a transaction in the network, it will just be like done like almost instantly, right? And in terms of, more on the business side, I guess, as I mentioned before, we have a, popular gaming application of Fantom called, I guess, for Kingdom, right? And that shows that, that people are able to build popular applications on Fantom and really take advantage of the existing technology and the new technology and generate like large numbers of transactions. And so what we're looking to do is to get, very similarly like popular applications, whereas in gaming and DeFi, back onto Fantom and generating large transaction volumes. Because I think the way that like transactions are generated, not just like on a blockchain network, but across any popular application, right? Is that you look at like YouTube, right? It's not like 10,000, it's not 10,000 channels that generate the vast majority of transactions, right? Or number of like viewers on the network, right? It's like the top 50 content creators on YouTube that really generate the vast majority of viewership for the YouTube network. And that's just like a normal way that like returns are distributed, right? There's always like asymmetrically skewed towards a few individuals or a few projects, right? And I think for a blockchain network, it's no different, right? All we need on Fantom is 10 or 20 really popular applications, and they will account for the vast majority of transactions on the network. So what we're trying to look for when we're giving out grants, et cetera, and talking to projects is what are the next projects that are out there that are going to get really popular and that are going to, maintain their popularity and are going to have developers behind them that are really interested in actually growing and maintaining their project, that they're not just going to abandon it, at some point in the future. So that's how we really see the opportunities going forward.
Those are definitely some lucrative opportunities, and the initial results of the new technologies sound really promising. So I can't wait to see how everything plays out once you start rolling that out to mainnet. Sounds really great. I think at this point, I think this is a good stage to wrap up. Thank you so much, Michael, for this great and compact overview of Fantom and everything going on within your network and also how you're positioned within this space. I wish you and the team the best of luck in everything coming up, and I hope we can dive into some of these topics in more detail in the future.
Yeah, for sure. Absolutely. And again, like, thanks so much for your time, mate. Like, really appreciate the opportunity.